Happy Monday, traders, and welcome to a fresh week in markets. Over the weekend, really a slow news weekend. Not much out in the weekend news-wise that certainly is going to trouble or move markets this morning. So we are going to see global markets open throughout the day, pretty much where they left off on Friday. So not too much in the way of any sort of gap risk. As far as the economic calendar goes this week. Again, it's a pretty slow week as far as any sort of major economic data or sort of risk events. We do have some global PMIs, manufacturing PMIs that come out, so we get a sort of health check on the global economy, but no doubt, look, they're going to be probably okay, and they're not really going to trouble markets too much. And we've also got probably the main event is an ECB meeting towards the end of the week. But no change is expected on rates there. The ECB's already done a lot of hard work cutting rates, and they're pretty much down to neutral rates. So maybe potentially one more rate cut left, but maybe none. So again, this week really is a slow week as far as data is concerned. Also worth noting is that we are in European summertime at the moment. So all the big boys are out there at the moment. They're either down the beach or on their yachts, and they really don't want to be moving markets or taking any big positions unless they are forced to. So this time of the year, a lot of the times we do go into sometimes some very quiet weeks and a lull in trading. So it would not surprise if this ends up being one of those weeks that is very quiet and no real big market moves. Having said all of that, let's just go through some of the main markets. Equity-wise, US equities, they are sitting at record highs. There's not a lot to say that we haven't said recently about US equities in that, obviously record highs are very bullish, the sentiment is very bullish, and July seasonality is also very bullish. So US equities, are in a very good space at the moment, and it's very hard to see any sort of major retracement, that's for sure. Just fun fact, if we look at Nvidia is obviously one of the stocks and companies that is leading the charge and floating all the boats, this whole AI thing. If you look, Nvidia's got 33,000 employees, the market cap of 4 trillion. So simple maths is that the market cap per employee is like 100 million plus. So those numbers are absolutely unbelievable, insane numbers. Okay, so we move along. US bond yields. They have had a pretty good few weeks, and we have seen them, trade up to sort of multi-month range highs and towards dangerous levels. But we have seen them retrace a little bit from those levels. So 2 years at the moment, trading around about 3.856 level. They were trading above 3.9. And US 10-year yields traded as high as 4.5%, but they've retraced and settled around at about 4.3%. So obviously, the lower those bond yields go, it's a positive for markets. But certainly, it's something to watch. Is if for whatever reason those bond yields do trade higher, that is something that can be risk negative. But again, yes, those bond yields have retraced from elevated and dangerous levels. As far as the US dollar is concerned, yes, it has followed those bond yields. So in the last couple of weeks, we have seen a stronger dollar. And again, the currency market should follow what those yields do. So lower yields, we'll see the market selling dollars again. A couple of key currencies, look, dollar yen has certainly found some good resistance at that 149 level. So bias, I guess, is to sell with a stop loss above those sort of levels potentially, especially if those bond yields are capped at the levels that we just described. And also Aussie is something that is a risk currency, and if risk continues bid as it has been, it's hard to see that selling off. So any sort of dips below that 65 cents, no doubt, isn't bad value. So 66 cents. Moving over to precious metals. Gold really hasn't been a big trade in gold, either long or short. It's been pretty much a range trade. Anywhere down towards 33.20 and below, there's been very good support. It's been bid all the way back up again. Anywhere above 33.60, 70 area, obviously we've seen the sellers. So really need to see a break of either of those levels, maybe to see a bit of momentum. But if you're a range trader, obviously you'll be enjoying this current range trading in gold. Silver, the bulls are getting a touch frustrated there. We had a technical break in silver when we made new 15-year highs and we broke above 37.30 area, which was a big bull flag on the weekly charts. We did trade up towards above $39, but before we've retraced, we're sitting just above 38 at the moment. Look, good technical support. Price does like to retest break levels. So if for whatever reason silver did go back down towards that 37.30, 50 area, that would probably be a very good level to buy some silver. But yes, silver does go into periods where you do see extended range trading. So maybe, unfortunately, for the silver bulls, maybe we might be just consolidating higher levels before they eventually get a run at $40. But bias by dips on silver. And just finally, look, one market that has obviously been doing exceptionally well in the last end of last week is the crypto market. We've seen crypto market explode higher. Especially now the altcoins led by ETH, which now is trading above 3,500 and looks like it's making a run for 4,000. No doubt, if we do see those levels or are breaking those levels, then the altcoins are going to go with it. Coins like XRP up near record highs, or made record highs. A lot of focus, a lot of attention on that. So at the moment, certainly, I wouldn't be fading this crypto rally just yet. It seems like there's a lot of bullish sentiment there. Again, look, probably it's going to be a slow start to the week, but in any case, good luck with your trading, and we'll catch back in with you shortly.